The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Welcome to our webinar today regarding the Work Opportunity Tax Credit Program sponsored by our friends over at CMS. My name is Nathan Triplett. I am the Sales Director at SWK Technologies for our Human Capital Management division. And on with me today, I have Brian Kelly. He's the Managing Partner at CMS Cost Managed Services, and he's going to take us through a presentation today and discussion around the Work Opportunity Tax Credit Program, help you understand if this could be a good fit for your organization, which employees that you're bringing into your organization could or could not qualify, and how you might be able to partner with Brian's firm in order to help secure some tax credits and add to the bottom line of the business. So without further ado, I'm going to turn things over to Brian and see if we can help you all secure some more tax credits for your business. Brian?
Thank you, Nathan, and thanks for having us and sponsoring us today as well, and to SWK Technologies for allowing us to host today's presentation. So I'm going to bring you through the Federal Work Opportunity Tax Credits today, which is basically called WOTC, WOTC. We're going to give you a little history on the WOTC program. We're going to talk about some of the legislation that's behind it. We're going to see if it's a valuable tool for your company or not. We're going to go and try to measure that. We're going to show you how the WOTC program works, whether you do it yourself or if you choose a vendor like ourselves. We're going to determine who is eligible and who's not, and then what the process is. And if you like what we say today and you want to join us, how to get started with CMS. A little bit about us. We've been in the WOTC, our tax credit business, for actually over 20 years now. We have basically developed a product to be completely web-enabled and configurable to handle today's most used devices, as an example. We're also a technology company in the back end, and we do have other tools. We have two different divisions, our WOTC division, which we're going to talk to today about, and then our iRecruit division, which is an automatic, an ATS system that is all electronic as well. One of the things that we really believe in is being customer-centric, so we really do listen to you as a customer, and we do make changes to our software based on our client's input. So thank you before we even start. So WOTC, which is Work Opportunity Tax Credit, is basically a kind of an obscure federal tax credit program that is designed to get people back into the workforce. Now, one of the interesting stats as of today is we have the lowest unemployment rates in 20 or 30 years. We're down to a little under 4%. So getting people employed, get them to be steady income providers and contributing taxpayers is really what this program is all about, really trying to get people from the unemployment and into employment. And our federal government will apply us with a federal tax credit for doing so. A little bit about the program. I'm not going to go through all this in detail, but it actually started back out in '78 under the Reagan administration, under the Targeted Jobs Tax Credit Act, the TJTC program. And it's designed for economically disadvantaged people, which we still have today. This program actually has been changed throughout the last 40 years to be other things to other people. But we're going to go through the latest legislation in a few minutes here. One of the unique characteristics of WOTC, or the Work Opportunity Tax Credit Program, it's actually under IRS legislation. So everything that we do from a tax credit perspective goes through the IRS. However, the DOL, Department of Labor, actually does the administration of the WOTC program. So each state is responsible for processing and certifying or disqualifying candidates and files as they're received. The other interesting component with the WOTC program are that there are what is considered rural and renewable zones that are across the United States. Those are economically disadvantaged areas, and those areas are then set up by the HUD and authorized by the HUD. So we have three different types of administration, which makes it kind of complex with the IRS, the DOL, and the HUD all in one roof. The companies that are eligible for the WOTC program are C Corps, S Corps, and LLCs. So these are privately held companies that are profitable because you need those tax credits to offset your tax burden. The 501Cs, which are nonprofits, are basically have only one category, and that's the Vow to Hire Heroes program. And that is if they're hiring veterans into that nonprofit organization, they can get an actual tax credit on their 941 on their payroll records. But the majority of companies that take advantage of the program are privately and publicly held companies that are for profit. The latest legislation is actually has been just reapproved back in 2017 under the Tax Cuts and Jobs Act under President Trump. Prior to that, it was under the PATH Act, which brings it through from December of 2015 to the end of this year, which is 2019. We do see the program being renewed, and you're going to see some signs of that as we go through the presentation. One of the couple things that are real big characteristics of the program is the items on the bottom. Currently, about $3 billion in tax credits are currently being saved on an annual basis right now. And then there's a rule in legislation called the 28-day rule. I'm going to talk more about that, but that's an important stat for you to remember and to write down. Okay. Some of the latest legislation of the PATH Act is basically one that just got passed, which is the Farm Bill. And this truly affects the WOTC program. This was a huge piece of legislation. It was $867 billion in this package, and a majority of that money went to what is considered the Supplemental Nutrition Program, or SNAP, which other people refer to as food stamps in a lot of cases. This actually impacted about 44 million people, and these stats are really consistent with today. We have between 40 and 45 million people on SNAP in the United States as of today. So if we wanted to look at how that program was broken down, that $489 billion over 5 years, 80% of that went to nutrition programs. A lot of other went to the crop insurance and some of the commodities, et cetera. But the majority went to nutrition in the United States. One of the other things that I want to just point out to you that we see legislation from time to time are when we have natural disasters in the United States. The last one was the Hurricane Relief Act for Michael. This actually hit several areas in the Gulf. It also hit Houston, Texas pretty hard. So we see sometimes there's certain disaster tax relief programs that pop up that are good for short periods of time if you bring people back into the workforce. We call it the retention credit. And a lot of these times when we have these retention credits, we calculate those based on people that were displaced because of the storm that we brought back into the workforce. And in most cases, those tax credits were 40% of the first $6,000 of wages. So you're going to see $2,400 come up a lot because that's the math. If I do 40% times 6,000, I come up with a $2,400 number, and that's a tax credit per employee for displaced people based on those hurricanes or those natural disasters. And if you fall into one of those areas and you want to know how to calculate it, it's honestly a simple spreadsheet that you need to create the people that were impacted in your organization and the revenue that they were paid, the wages paid, determine that tax credit value. And that will go to the IRS 5884A form after that. What are these disadvantaged or targeted categories that we referred to earlier? There's actually 9 different qualifications for a company to receive a WOTC tax credit or work opportunity tax credit for a individual. The most common ones, honestly, are the number 6, Supplemental Nutrition Programs, which is SNAP, and then TANF, which is item number 1, and actually long-term TANF, item number 9. Between those 3 areas, which are basically assistance and housing, it makes up about 82% of all the tax credits we actually receive for our clients. Some of the other areas that we're seeing some pick-me up is the qualified veterans. I'm going to get into that a little bit more. And then just recently, there was some new legislation passed on the ex-felons. So we'll talk about that a little bit. So So let's go through these and so you understand what they are. TANF is temporary assistance to needy families. So people that have had housing or federal assistance in that area. That's short-term TANF, short-term temporary assistance to needy families. The veterans. The veterans is a Vow to Hire Heroes program. So I'll summarize this on the next slide for you. But basically, these are for veterans that have been discharged from service in the last several years that may have been unemployed for 4 weeks. And if so, then you as an organization are available for a federal tax credit for hiring that person. There's also advanced tax credits for the disabled veterans, people that have had service-connected disability that we bring back into the workforce back home as well. And here's a kind of a good example of that. In the bottom left, on the bottom left-hand corner in red, we see those different areas of the Vow to Hire Heroes program. So this is somebody, the first one, somebody that receives SNAP, and we get back into the workforce. That tax credit is valued at $2,400 per new hire. If they had a service-connected disability and was discharged within the year, that pumps up to $4,800. And if that veteran was actually unemployed for 6 months, that tax credit actually advances to $9,600 per person. So you can see where these tax credits can really be beneficial for your organization. The next item we have is the ex-felons. These are people that have had a felony, have been released from service, and we're bringing them back into the workforce. We have a big bakery in New York City. That's all they do is hire ex-felons into the workforce, and they do very well in getting these people back on their feet and back in jobs that they're productive. This has actually just been enhanced by the new First Step Act back in December of 2018. So they're releasing more people with low-level felonies back into the workforce so that we can get them back to work. The designated community residents, this is where I was talking about HUD. And HUD basically administers this program. And currently there's federal empowerment zones, and there's also rural renewal counties. The rural renewal counties are currently in effect, meaning that they're in place. HUD has not reauthorized the federal empowerment zone since January of 2016. Interesting point though is, as a service bureau, we keep actually track of people that qualify under those empowerment zones. And when that is passed, we would obviously file that for our employers that we're servicing. So we keep working, even though some of these things are delayed, and we're looking for those to be reauthorized. Here's an example of some of these designated rural communities around the United States. Obviously, we can see in the mid and central United States, that red area are all RRC zones. So basically what that means is if I hire somebody who lives in one of those designated areas and they're between the ages of 18 and 40 or 18 and 39 years of age and they live in one of those areas, that's a federal tax credit valued at $2,400 for bringing those people into the workforce. Vocational rehabilitation referrals are another one. These are your rehabilitation acts, the employment networks, the ticket to work programs. So getting people who have basically physical or mental disabilities back into the workforce as well. Those are $2,400 tax credits as well. SNAP, which I mentioned, SNAP and TANF are our two largest categories of all tax credits we receive. And that would stand to reason because there's between 40 and 44 million people that are on SNAP currently, which is a lot of people. We want to get these folks into the workforce. So if they're 18 to 40 years of age and they receive SNAP for 3 months of the last 5, that would be a qualified candidate under that SNAP initiative. And here's some stats that actually are kind of demonstrating that we put from the USDA in the food stamp program. By the way, that 42 million people amounts to 1 out of every 7 Americans right now. Supplemental security income is another category. So if they're on SSI and you hire them, that's also a valued tax credit of $2,400. And then we have the long-term family assistance, and that's the TANF that I talked about, temporary assistance to needy families. And these are people that are in designated state and federal housing that we bring on board. Again, we want to get these people back into the workforce, and there's tax credits incentives for doing that. And then the last category is qualified long-term unemployment. And these are people that basically are unemployed for over 27 weeks, not receiving unemployment any longer. And again, if we get them back into the workforce, there's tax credits associated with that. And currently, that's about 1.7 million people throughout the United States that represent that number. Okay, so we talked about the different categories and the different values. We talked about the vets and service-connected disabilities, and we talked about SNAP and TANF being our largest categories that we obtain tax credits for. The 28-day rule, basically what the 28-day rule is you can't go back in time. This is a hiring program structured by our legislation, our Congress. So we want to get people back into the workforce. So you need to screen employees on or before they're hired and determine if they're potentially eligible for one of the categories, and then submit that information to the State Department of Labor within 28 days of that employee's start date. So anybody listening today, once you understand the program a little bit, don't sit back, because you're leaving tax credits on the table, basically. So if you wanted to do the WOTC program for yourself, there's a form IRS 8850, and we'd have every employee fill this out along with their hiring kit. This asks the specific questions to determine if the employee is eligible for this WOTC tax credit. What I will tell you is that if you look up the IRS 8850 and you start reading it, it's a bunch of double negatives. It's a little hard to understand. So a lot of times people don't fill it out as correct as we'd like it to. The other form that's required for the WOTC qualification is the form, it's the U.S. Department of Labor form 9061, and this actually is an extension of the 8850 that needs to be completed. So it's a little bit of work for each employee to go through. That actually amounts to 7 questions on the 8850 and 11 questions on the 9061. So it's a total of 18 respective questions that the person would need to, the new hire would need to complete and fill out. One thing we will tell you is basically doing this over 20 years, that we know that 10 to 15% of your workforce is going to qualify, whether you know it or not. And obviously there's going to be higher in some areas where we have economic disadvantage areas, but 15% seems like a number that we keep coming back to. So if we take the number of new hires that you have per year and you multiply it times 15%, then take that number and multiply it times $2,400, you're coming up with your respective tax credit estimate. And I'll go through that again. There are some rules of thumb with the WOTC program, and that is the employee does have to work some minimum hours for the company to receive a tax credit. The first one is 120 hours. So the employee has to work 120 hours for the employer to receive a tax credit valued at 25% of their gross wages, up to the first $6,000 of wages. So if somebody was hired and they worked 125 hours and made $1,000, that would be a 25% tax credit of $250. If the employee continues to work and exceeds the benchmark of 400 hours, so say that same employee worked over 400 hours and made $6,000, that tax credit would then extend to the 40% of the first $6,000 of wages, which is that $2,400 tax credit. So there's 2 benchmarks, the first one being the 120-hour rule, employer receives 25%, and then the 400 hours, we want people in the workforce, we want them working, and we want them receiving wages. The employer would get 40% of the first $6,000 of wages, which is $2,400. Then the second year, we'll get into the second year, Long-term TANF folks get 50% off their second-year wages up to the first $10,000. So that actually second year, that tax credit exceeds the $5,000, which is pretty good. So here's an example of maybe an average client of ours. Somebody has about 500 employees per year, or 500 employees. They have 200 new hires per year. The qualification rate is 15%, that number that we keep coming back to. That would be 30 qualified people at $2,400 is a corporate tax credit savings of $72,000 that are used dollar for dollar off your tax liabilities. Okay. So why use a third-party service? Obviously, you can see there's some complexity to it. We do find that it affects 3 different departments. The HR department, which needs to work with the new hires to collect the information. We have the accounting division that's going to handle the tax and the tax credits against our corporate liabilities. And then we have our payroll department that we need to determine the total hours and dollars worked so we can determine the value of the tax credit. As you can see by going through that 8850, there are some sensitive questions. A lot of employers just don't want to ask an employee if they receive SNAP or not. So as a third-party administrator, it kind of takes that burden away from you. Kind of makes it neutral. 3 or 4 years ago, the federal government kind of caught up with the times and allowed electronic signatures. We have moved in that direction from the beginning. So we actually offer 3 methods for employers to collect that information to screen the employees. I'll bring you through this a little closer in a second. So we as an organization actually screen new hires in 3 different mechanisms. We do the old-fashioned paper if we have to, if somebody doesn't want to move to technology or they don't want to talk to our call center, they can do the papers. Even though it's a paper document, we've actually rewritten the paper, the questions so that they're easier to understand by the new hire, so we get a higher result. We also have a 1-800 call center. So for organizations that, again, aren't technical savvy or don't want to use paper, they can call into our 1-800 number. Call center, one of our representatives will perform the screening. And then we have our web portal, which we just gave you a glimpse of. And that web portal basically creates a paperless environment for everybody. So with our call center, the call is about 3.5 minutes long. We are actually multilingual. So if we have different populations of folks, we can handle the different language and the language barriers with that. And basically what we're doing is we're screening the employee. We're indicating to the employee that their employer is taking advantage of a federal program to initiate jobs, and we need their participation. And by just saying those words, we find that we get a higher rate of return than somebody trying to look at a piece of paper and diagnose it. Our web portal, again, is all basically all paperless. Again, it takes about 2 or 3 minutes to complete based on how fast you can type and read the questions. There's no forms that are need to send in to us or nothing to be monitored. Everything's handled electronically. We're indicating to the employee that their employer again is taking advantage of a federal program to initiate jobs. We've made the responses and the questions very simple to read. This slide is actually showing kind of a mobile view where everything is kind of to the left-hand side. So if we wanted to use a mobile device, it sizes automatically to that. Or actually, if you have a tablet that you're screening employees with, it would size automatically to the tablet as well. We've made the actual questions very simple, yes and no's, so they're easier to understand. The reason why we do that is because we know we get a better rate of return. If people can answer, can read the question, understand it, interpret it, and answer it, they're more apt to be qualified candidates. Our browser can automatically adapt the language into 100 different languages. So again, it's easier for somebody to understand, easier for them to read. They fill the questions out more accurately, and we get a higher success rate of return. We used to require supporting documents for a lot of the things in the past, like if it was an ex-felon or if it was a veteran about to hire heroes program, we have to get their discharge papers. But in today's technology, we actually are tapped into a number of these databases, and we can actually get the better DD-214 electronic. Our clients don't need to try to dig that up. So we've made that a lot simpler on the back end as well. You as an organization are also going to get visibility to who's been through the process, whether we screen them or not, and then also determine if they're eligible or not. So the folks in blue, that highlighted blue, are actually candidates that said yes to one of the questions and that we're processing. You're going to have access to this portal, and it's all in real time. In addition, we're going to provide you with a dashboard. So we're going to give you some physical visibility into your organization. So the box in the blue in the top left-hand corner there indicates that 460 people were screened. We submitted 53 of them to the state DOL. We got 19 of them back as approved. We got 34 still pending. In 2018 so far, they saved, we have $19,000 in savings. And if we look at the item on the bottom, we can actually track the number of total applicants we're screening by month, how many are being sent, how many are pending. So we're giving you basically real-time detail of how the tax credit program is working for you as an organization. Once we know the actual value of the tax credit, it's going to actually be broken down on the IRS 5884. So this is how you're going to actually apply those tax credits to your organization, to your tax liabilities. So it's broken down in those three categories: the people that work between 120 hours to 399, the people who worked over 400 hours, and then the second year people that are at 50%. So we're going to do all this work. We're going to actually screen every new hire. We're going to do that within the 28 days. We're going to submit it to the DOL. We're going to get whether they qualify or not. We're going to track their hours and wages to determine the actual value of the tax credit. At the end of the day, it goes on to 3 lines on the 5884, and then this actually gets shifted over to the Form 3800, Part 3, Line 4B. So it shows up as one line on 3800. So with that said, is there any questions today?
Thanks, Brian. Nathan back here. Looking through, I had one question about visibility, but hopefully the question or the showing of the dashboards was able to address that question, because you do get a dashboard that's showing you, all of the opportunities that qualified. So you, as the company doing it, have the ability to see at any time how we're doing in terms of securing tax credits. One other question in terms of kind of getting started and the time frame it would take to get set up here. Can you speak to that, Brian?
Absolutely. So what's required if CMS is performing the services? We need 2 things. We have a simple client agreement that doesn't lock anybody into any long-term contract. We do work on a contingency basis, so we get paid on actually the tax credits we save. And then we need a power of attorney so that we can submit the appropriate documents and submit the appropriate 8850s and 9061s electronically to the state. So we need power of attorney by state set up. In all fairness, we can get somebody set up and going in a day or 2. And we want to do that because, again, that 28-day rule, as soon as we educate the employer that he could be leaving dollars on the table, they don't want to wait any longer than a day to get started. So we can get you started very quickly with a signed agreement and a power of attorneys in the respective states. Does that help it, Nathan?
Yeah, I don't see any further responses to that. I think that answers the question. I don't see any other questions in the queue. So at this time, I want to thank everybody for their attendance during today's webinar. Hope you were to learn something. If you have any questions, we will be sending out a copy of the PowerPoint and the presentation after today's webinar, along with some additional information regarding Brian's service. So we certainly appreciate your time and attention today. And thank you for choosing SWK. Bye-bye.